Now we're doing a bit of a gear shift back to a business very similar to Visa, and of course people will be familiar with it, that is MasterCard. These companies came out of the banks, that's who owned them before, and then at some point they all went public, and then the banks have been sellers and other investors have gotten on board. Similar business, similar network, similar relationships with banks. Smaller though, remember Visa, MasterCard relationship is about half the market cap. What's the market cap of, yes, there, $127.8 billion. So that is literally just a little bit more than half. Price to earnings ratio around 30.7. Dividend yield 0.75. So very similar metrics.
Yeah.
What can you say that's unique or different about them?
They're smaller.
Yeah.
So MasterCard is smaller and they've got a little bit more exposure to the rest of the world relative to Visa.
Meaning what? That Visa's got more in the US?
A big exposure
more
to
dominant
the US.
In the US.
They're very dependent on US transaction volumes, even though they are trying to push in otherwise.
Sorry, who is the one that's more focused on the US?
Visa.
Oh, Visa is.
And then they've got Visa Europe, and then they're also moving into other markets. But MasterCard has a 60% exposure outside of the US,
Right.
so that's quite substantial. And they've got a really attractive exposure in a market like Brazil, which is also a very attractive market, massive population, still relatively low kind of card adoption. So they're a lot smaller. They're not a lot smaller than Visa. They've got about 20% market share. I mentioned earlier that Visa's got about 40% in terms of card transactions. So doing pretty well for themselves. And probably they'll benefit from exactly the same structural support that Visa will. You've got low penetration of card payments in emerging markets. You've got high penetration of online payments and remote payments via your phone. And you've got global transaction volume just increasing organically as well.
Because earlier we were making jokes about how we don't have cash anymore and so on and so forth. But apparently if you look at the total number of transactions in the whole world, or in any particular country, there's still a very high percentage of transactions which are done doing cash. So the potential for enormous adoption in future years is very much on the table.
Yeah, especially if you look at your less developed Southeast Asian countries, looking at India, Indonesia,
massive populations,
a place like Thailand. We were in Argentina the other day as well. Argentina used to be a developed country.
You keep saying we like it was you and me, but you're talking about your husband, right?
Yes, it was me and my husband. We went to Argentina. But anyway, so there, I mean, this is a developed country, or it used to be a developed country. It became a developing country, and we couldn't pay with our card anyway.
Visa is huge in Argentina. They sponsor the soccer team and the rugby team.
So you'd think that merchants would actually want to accept payments. No, I think these guys are dodging.
Some work to do.
I think they're dodging the state a little bit.
Well, that's part of it as well, of course. So it's the customers that will push for it, and the merchants. Because if you think about it, the merchant actually, in the long run, wants the money in the bank account, not banknotes floating around, unless they're trying to dodge VAT or not pay taxes, which is not good.
Exactly, but in that case, you'll probably receive state support or government support for demonetization, for card payments, because then you can track everything and people can pay their taxes.
Because the government doesn't want to ship cards and, ship banknotes around. It's dangerous, it's expensive, and neither do the banks.
And you miss out on tax, because that's how people dodge it.
Okay, enough about that. I know MasterCard is doing biometric readers and all this kind of stuff. That's where I assume, somehow or another you link it all up, you scan your thumb and then you use your thumb at the point of sale or whatever. Yeah,
they've got about 20%.
Iris of your eye or something.
Yeah, they've got about 20% of their revenue coming from sources other than transactions. So they've got like an anti-theft and money laundering kind of service. They've got an advisory service. So they're a little bit more diversified than Visa, but a lot smaller in terms of transactions. And actually, the growth profile is a little bit lower. So that PE of 30 times unwinds to more or less the same level as Visa.
We haven't mentioned this yet, but both of these companies make a lot of money on Forex too. Because when people travel, you use your card and then they make money from switching everything into dollars in the back end and so on and so forth.
So that's another positive thing. Globalization and increase in travel is good for these companies.
Okay, good. So we're hot on MasterCard as well.
Yeah, so I would be less hot on MasterCard, but still hot, if that makes sense.
Good, that's fair enough.